Hello guys, and welcome to another Block Party trading live stream, and we have the microphone working from the get-go today. We are just on the cusp of the PPI data dropping, so we're starting to see a little bit of volatility from Bitcoin ensuing, which is to be expected. We're going to do a quick recap on trade I've taken today, swing trade, probably look at a trade, some of the signals that will drop soon as well, and we can look to set up a swing trade, but ultimately we want to see what is going to crack-a-lack with the PPI data. For those of you who don't know, the PPI data is the change in the price of finished goods and services sold by producers, excluding food and energy. The usual effect, actual less than forecast, as usual, is good for crypto. So let's take a look at what is forecast. It is 0.2% on the core PPI month on month, and then on the US PPI month on month, it is 0.3%. So we are looking for anything less than that, and we should hopefully pump. Now, we saw pretty positive, semi-positive, I'd say, CPI data yesterday, for crypto anyway, and I expect we'll probably see something relatively similar today, so maybe a kind of a shorter term pump. But as you can see, there is some volatility just starting now. Like we got into this trade earlier on at 27,400, which was a little bit of a sharper price. That's quite nice. So around about here, we did go up an entire 10% at one point. However, true to the indicator, I just wanted to leave it to just run to profit. And sadly, we missed this because the price just slammed down so quickly. So we currently do have an entry sat. Tell you exactly where the entry is. Open orders. We currently have an entry sat at 27,412, which is just here because we're flashed a short. Hey, we've done some pretty nifty little updates on the indicator as well since we last spoke. And what these indicators are is this. What we found was there's a couple of styles of signals, and I certainly noticed that it was getting very crowded on the charts and also on the exchange as well, with a lot of overlapping signals. Whilst, you know, it can like lead to pretty much good profit. I also did a lot of backtesting on what the first signal of the given direction was. So is it the first signal of the short? Ignore the rest. First signal of the longs? Ignore the rest, and so on and so on. And I found that we were getting very similar results, but with far less kind of intensity of the signals. Now, some people do like really intense signals, and that's totally fine. However, certainly what I prefer is to have kind of fewer signals, to be honest, and target those better entries. And I do like not having overlapping signals. It just makes it a little bit more difficult. Say if you want to take profit from the first trade of 3 trades, it makes it quite difficult to do that on, what do you call it, on MEXC. So I wanted to stack things a little bit more in my favor in regards to actually kind of being a bit more accurate with the signals and the targets, and also ultimately less stressful. So that's what I'm going for at the moment. I'll show you the settings as well. So what we have now, which is on version 1.3, as you can see just up there, we now have a show conservative signals, which if you go highlight the toolbox, shows conservative signals. This will be the first signal in a new long or short direction, and ignore the rest until new direction is confirmed. This is to reduce frequency and also decrease overlapping of signals. And then you can also have the high frequency. So if we were to, let's just show you the kind of like difference it would make. And I'll be honest, it's not like a crazy difference, and kind of nor should it be. It's because all of the signals, whether they're high frequency or conservative, are very strong. This is more kind of a preference of trading, if you will. So if I click on show high frequency, whoop, there you go. We get to see all of these new signals appear, which that's great, you know. So like, you can see what I mean here. For instance, we have 2 bearish signals side by side. We have 2 bullish signals. I mean, realistically, on these ones, you probably could have closed those in a nice profit, but they don't actually hit the TP, and then so on and so on. So the bid here is, what I do quite like about this is to not overcommit to one direction too much. As you can kind of see here, the downside is sometimes that you will miss, say, maybe on a trending direction, let's say, you may get 3-4 kind of bullish signals, all which will go to target. You will miss out on those opportunities. However, like I said, it balances out. And if you're quite consistent, which this does make it very easy to be, because you don't have to be so frantically entering a lot of the signals. But like I said, it really is each to their own. And it's what you prefer, really. So personally, on scalping, I prefer the conservative. On the swing trades and longer term, I quite like the high frequency, you know, because they're 6 hours apart. So we kind of get a little bit more frequency, and they help you to not miss out on more kind of defined trends. And with the longer term swing trades, you also get a little bit more time to be reactive to them. So if you do see a kind of significant change in market structure or divergences form, it's not quite like the 3 minute where you have to be super reactive, otherwise you pretty much lose half your profit. With the longer term stuff, you can be a little bit more, what's the term? Yeah, you can be reactive, but at your own pace. So that is where we are at the moment. And we are actually waiting for the price to retrace to around about this region here, which is where we've got our buy set up. And we're following the, let's turn off these high frequencies to not cause a little bit too much confusion of what we're entering today. There we go, and off you go. And there we go. And we have had absolutely insane weather at the moment. If you can see in my little streaming box just over my shoulder, we've actually got the air conditioning unit set up yesterday because it was so hot. We're in the UK, remember, guys, so this isn't not... so we don't. It's not common to have air conditioning units within offices and stuff. So we have our portable one, which we crack out, you know, if we're lucky, 3-4 days a year. Yesterday was required, so we set that up, and today, if you can also see out the window, we've actually got torrential rain. So crazy news in the weather. But that's not what we're here to talk about. We're here to talk about the price and what's going to be happening. So we're currently at, what time are we on? We are at 1 minute past 3. We've got 29 minutes till the PPI data drops. So let's take a little bit further look into that. And like I said, one of the things that we are looking for is basically a less than forecast. And the targets are for the PPI month on month is anything less than 0.2, and the US PPI month on month is anything less than 0.3%. I foresee that we'll get a lot of speculative buys and sells leading into this, as we did yesterday. And, you know, if we want to take a quick look at what yesterday was like. So this was the PPI drop yesterday. We were on UTC +1. So 130 is there. We're going to fix this little problem that seems to keep saying it's disconnected. However, it seems to be running fine. So just causing a bit of FUD. So this was what we saw yesterday with the CPI data that came out like semi-positive. Really wasn't like crazy. And we went up a further 1%. So it's a nice scalp if you'd have got in on that one. And you had quite a bit of time to get in on it as well, which is quite good. However, I'll be honest, like, given a lot of the analysis that I've been doing recently, I wasn't convinced that this was going to continue up. And, you know, lo and behold, we smashed down like 5% in response to it. Although have kind of rewrited ourselves a little bit. And we are, as you can see, this is kind of funny because this is an exact representation of a trader's mentality leading into definitively obvious volatility. And this is what's happening, you know, so nobody wants to make any commitments until the data drops. Yeah, you know, I've taken one scalp. I'm not kind of owning. I think I might even. No, I'm not quite there yet. So I'm a little bit, still a little bit off the entry point for my short. So it'd be nice if it pops up, and then we're kind of guarded against whatever happens next, really. It's very likely that the direction it goes in will probably exceed either 0.3% or 0.646%. So yeah, ultimately it's gonna be a bit of a bigger swing, I'm expecting anyway. I do want to try and fix that because that's really irritating, that pop-up that keeps going there. However, it's not as easy as just moving a window around. Good old streaming software. So let's keep an eye on that. Like I said, we're not going to drift too far away from the Bitcoin chart really at any point. We will take a quick look at BAO, which has been the #1 contender today for my trades of all the signals that came through. We'll take a little look. So interesting, if you're into your TradingView alerts, I never really knew that if the actual time of the signals and the candles are different for different exchanges. So for MEXC, for instance, the signals will fire at 5 a.m., 5 a.m., 11 a.m., and then 5 p.m., obviously. However, with signals, when you set alerts on Binance or BitGet, then you'll see that signals will fire at 7 a.m., 7 a.m., and then, oh, there we go, 1 p.m., and then again at 7 p.m. So 7 a.m., 1 p.m., and 7 p.m. So what is quite cool about that is, I never knew that. I always thought it was just always kind of locked to, I think, UTC, and that was everything, mainly because Binance did that, BitGet did that, and they were the two, and Bybit as well, actually. So I always noticed that they had complete sync on, we're actually in profit again on, there we go. So our short has just filled now, which is cool. Our long is now in profit. Okay, so we'll see how that goes. I do need to add a limit order to my short trade instead of a... Why have I got 2 stop losses on here then? Oh, woe is me. Well, I don't even know what happens sometimes on this exchange, but 2 stop losses that are market orders I'm not going to cry about because they're good till cancelled, so whatever. Anyway, so let's add in our take profit at limit order for our shorts, even though it is pumping pretty nicely. But we'll keep an eye on that. So super easy to do. Always double check that it is the short that you're setting up, otherwise it will pretty much automatically close. So let's set that one in. Wow, look at it go. Both the weather and Bitcoin. Alright, let's get rid of that. Cool. No, didn't fancy getting rid of it. Cancel. Go away, please. Thank you. Look at the price go. We're going to smash straight through that short stop loss already. Looks like somebody might know something we don't. Oh, we're pretty good on... Yeah, that's all right. Our going to hit a hard stop here, though. That's the interesting thing. Should we take 10% profit on our long? Or is it going to retrace too quickly? Let's just get out of that trade. I've got a feeling it could. Or was that a bad call? Yeah, it was a bad call. Taking that out. Okay, right. Well, not the end of the world. I think we're about break even on all that. And then look at it go. This is why you should leave your take profits. Stop fiddling around with them. Honestly thought it was going to slam back down then, to be honest. Hey ho. But that long proved to be really, really nice. Let's jump back into it. I'm kind of pretty happy now that we do actually have all our trades closed at no loss. So bit of a win. We could have left that that's long to go. So the good thing, let's have a look at that long, which I really liked, was I just waited a little bit and I got a much better entry at 27,400 down to here. So you know, the actual risk reward on that one was pretty good. Let's bring it up here so you can see the tools. So the risk reward on that was 2,401. And I was just using the actual indicator placement, and as usual, I give it a little bit of extra. So the risk reward on that was almost 2. So had I have left it, you know, would be up quite considerably, even with the short stop loss. But it really is off. Look at that. So that would have hit quite nicely. Again, you should have just left it alone. But it is what it is. Win, TPE. And then put a little... So 1 for 1 today. God, the moment I move around my favorites bar from either the top or the bottom, then it's like all chaos ensues and I have no idea what's going on. Get that straight to that take profit. That would have been perfect as well if you retrace from here. So we do actually have a bullish signal that is firing at the moment. I mean, to be honest, like, I'm kind of just going to abide by the indicator. He says as he closed it, early. But yeah, let's get this trade kind of looked at, considered. I'm pretty much sure that the stop loss will show around about 0.6. So let's just pop that in the risk calculator. So 0.6 would lead me to, actually no, we had a flash close, so that would have been hit on the fees and a stop loss, so we might just be, I think we're at break even. So let's hold off on this signal until we get an actual candle close. We've got 1 minute, 17 seconds till candle close here. I kind of want to see if we push down a little bit further. So I'm pretty sure that the indicator will give me a stop loss around about here. Although there's consideration to pop it a little bit lower. I mean, it's not like this support will kind of hold against bad PPI data, to be honest. If it's going down, it's going down. So there is a sentiment that there is pretty much a 50-50 chance. Like, we've got 19 minutes until data release. Feels like somebody knows something we don't. I mean, if we look back to the pre-CPI data, so that's when it was released, and you can see this like little lead up to it was pretty bullish. So there is that to consider. So we could take a little bit of a punt here, which I am totally fine with. And then just put a long 0.55, I think 0.6, we'll go with 0.6% where I think it'll end up. 1667. And then, yeah, we can take this trade now. We've got 7 seconds to go. So position is placed. We're going to get filled. There's the alert. Come on, Mr. Position. Oh, don't bounce from there. Don't. You've got to be kidding me. Here, I'll show you the screenshot that we're dealing with. If this is the case, this is my entry, and that's where it bounced. Gotta be kidding me. Right. Looks like it might bounce back down. Either way, I think we're going to see enough volatility that should pick up. So let's stop complaining about that and get at least get the stop loss in at this point. So yeah, there we go. It's exactly where we thought it was going to be. We're going to go with a 0.6%. So what are we at? 27,480. 27,480. So 0.6% down. Either way, we know where our stop loss is going to be. So I think we're going to go for around about. Which stop loss? This one is quite aggressive, or this one is probably more likely. We'll go with 2733. So I don't know if you know, but if you right click anywhere on a chart, then it's pretty handy. You can just copy the price straight from there, which is pretty cool. Let's get this stop loss in place and then do the same. In fact, actually, I think we should just abide by what the indicator's saying. So the reality is, I mean, if the price goes wrong, if the PPI data doesn't go in our favor, This stop loss is not going to help against this stop loss. It's just it'll crash through. So we may as well be a bit sharper on the stop loss. Why not? Just reduce those losses a little bit. And yeah, you know what? Abide by what the indicator's saying. I mean, we haven't even filled the order yet, which is a little bit frustrating. It felt like we weren't going to fill this one, and then look at that, crash straight through. So hopefully we don't see the same again. And let's see where our order price is, so you can visualize it. Oh, hello. $20,480. Let's just do this. Old school. There we go. It's coming back down. Come on, Phil. Off to the races, please. That's what we want to see. And then we'll keep a close eye on the PPI data and what's happening there. And then as soon as this opens, we'll do the usual, set up the limit order accordingly, and all will be groovy. So let's get that price ready, copy price, and wait for that to pop up. So you can't see that just yet. But this is what we're waiting for. Very close now. Just teasing me. And order is 3, 2, 1. There we go. I knew it. There we go. Now bounce up. That's it. We've got our order. We want you to go to the moon, or at least to at least to 27,600. That'd be nice. Oh, there you go. Thanks. You heard me. If this goes straight up, I mean that you owe me Bitcoin for this one, for yesterday's not yesterday's, the day before's efforts. You know, you screwed me many times with your wicks. We do have a pretty significant resistance right here, significant for the 3 minute for sure. So if we kind of break out of that, it'd be good news. And then it's not over yet. Like I said, we've got 30 minutes until PPI. Doing a little bit of reckless trading going into it. Why not? So what we're doing there now is just like, handy little thing, if you press Alt and J, it'll do these little rays for you. So just here. One thing which I did request from TradingView's development team is to be able to customize your hotkeys for anything. Because that'd be so handy. Like, I use parallel channels a ton, and I hate having to click on it. I use the polyline a load. I use the call out a load. So it'd be really nice just to be able to like hotkey these things. And to be fair, I never use crossline. I don't think anybody does. Please comment if you do. I apologize if you're a massive crossline user. Alt C. Yeah, I mean, like, I think it seems like a pretty logical thing. I think you can even do it on MT5. So come on, TradingView, get your shit together. Anyway, so what we're hoping for now is just quite simply a bounce up, and for MEXC to not explode before them. CryptoCraft, and CryptoCraft has just had a new. It's so nerdy, but like I absolutely love it. Like leading into these announcements and stuff, before they had a little refresh button there, which you'd have to click feverishly to see the price pop up. But now you've got a little countdown timer, and everybody loves a countdown timer. So yeah, love it. But we'll check that out when that comes. We don't need to see the alerts there. We'll get signified quite heavily if we do. Although there's not a huge amount on the horizon, for it to do a bit of kind of manual analysis, we've got an oversold section here, kind of an upward trend line, nothing to write home about, to be honest. And then, yeah, we're just waiting for what's going to come. I do know how to fix that, but I just forgot to do it. Cool. Right, again, I'm not going to veer too far away from the BTC charts. And then probably get this ready. So there we go. I really do love this website. I think it's so great. Okay, come on, Bitcoin. That's not even like such a piddly ass resistance. Just break on through. Because they always said that the classic 27,542 was such a significant resistance here. They always said that, right? Said no one. Yeah, come on, bounce up, and then we can go on to into this data, all stress-free, which would be nice. Bit annoyed about that trade there previously, I'm not going to lie, because that's didn't actually realize it would go on to almost a 2x risk-reward, which would be nice. Kind of like the perfect hedge, really. And again, sadly as well, it's one of those things where we can keep on looking in hindsight. Had we have left that, yes, would be that had been 20%. Had we have got in there quicker, we could have probably closed that a bit quicker. You know, it could have been 26% up. But such is life. And it's kind of like the amazing thing about this indicator is it is kind of so strong that you can be as I'll say it, negligent as me in regards to actually placing the trades. It doesn't really matter too much because you're always going to get some great opportunities. Yeah, I mean, you get some whomping trades as well. So it's worthwhile doing a bit of analysis, but like, it's kind of quite a nice trade. I mean, I guess that could retrace quite far down. This trade just over here. Yeah, again, use your due diligence a little bit. Like, if you're following that trade, if you enter that trade, you know, you're probably still going to be around an hour into it. That goes up 1.3%. It spikes at 1.2%. Yeah, like I said, that's within what, like 5% of the 95% of the total profit. Take profit, man. Like, don't worry about it too much. But yeah, it's pretty damn successful most of the time, anyway. And you know, Bitcoin does have its moments though, so it can't predict the future. It can't predict like Fed announcements, FUD, and stuff like that. But what it is really good for is when we're following relatively standard movement and technical analysis, it's pretty good. And that's, to be quite honest, like the bones of all indicators in the world. Outside of, like, say, I'm talking about indicators that are technical analysis based. They can't read what's going on in like kind of crazy worlds, but they also can't, you know, there is an element of how reactive they can be as well. Like some indicators kind of operate during candle opens and stuff. Like this indicator operates to candle closes because it offers a pretty solid, consistent, that's indicators like that are really great for doing a lot of back testing because they're so consistent in regards to what results you can expect. Granted, you know, you may not see some of the best entries because it is on the candle close, but also it does eliminate a lot of false entries. So depends which kind of route you want. Either way, this indicator only operates to candle closes, which is what all of our back testing is done on. All of our kind of live testing as well is done on. You can get a bit trigger happy sometimes and want to enter the trade a bit early. I mean, as you saw then, it's not the end of the world if it's like 10 seconds early, 15 seconds even. Like, but beyond that, like, I'd be a little bit cautious because the price can move quite sharp. I guess it's relative to the higher time frames as well. Obviously, if you're on a 6-hour time frame and you've got 5 minutes to the close, that should be fine, you know, absolutely fine. But where are we at? Let's give ourselves a little refresh. Here we go. Here's the countdown that I was talking about. 5 minutes 50, 49. Love it. We've also got unemployment claims as well, which on the Cryptocraft scale of importance comes up as medium impact expected. I think it is, yes, sure, it'll act as a bit of a catalyst, some more fuel to the fire depending on what it comes out at. But we may as well take a look at how that's going to impact. So actual greater than forecast is good for crypto. This is the measure of the number of individuals who filed for unemployment insurance for the first time during the past week. So if it does come up higher than 245k, then that's good. It's not great news for the, you know, for real life kind of thing, but good news for crypto. So again, it's a bit of a bittersweet victory in that sense for crypto. Victory, I guess, is the wrong term, but for your bulls out there, you know, if you are bearish, then not so much. You want to be on the good side of the economy for the bears, yeah. Right, not far off, 4 minutes 43. Price is shaking a little bit now. We're starting to retrace. We'll see. High is Bitcoin going to be 31k or first 26k? In my opinion, I think we're going to see 26k first. Just generally, I think depending on what happens today, if the data for the PPI is like crazy bad, like bad for the economy in the US or the people in the US and great for crypto, then yes, I mean, sure, we're not huge, like a million miles away from 30k. We could head on up there. We'll take a little look once we get the data dropped. We'll take a little look at the longer term high time frame BTC chart. In fact, we can have a little look at it now. Let's just refresh this because it does it every now and again. I've mentioned this before. Whenever you do any kind of like trading view analysis, it for some reason resets like your keyboard in a way so that it just does not recognize any keystrokes. So just then, you know, I tried to type BTC in order to get Bitcoin up quickly, but it just decides to ignore it. So you got to refresh the screen, and then it will allow you to be semi-quick. But we're starting to see some real lag at the moment, so I do apologize. Three minutes to go. Okay, which chart should we look at? Crypto, all sources. We'll go to MEXC. Yeah, I think I pop one on here. So if we just get this up quickly. So this travel white YouTube shorts, I guess that's what YT stands for. This is kind of what I was thinking, you know, like back here is when we placed our shorts and we gave ourselves a healthy stop loss up here because we had a couple of quite significant rejections there. And then we had a third rejection again to pretty much confirm that that's a pretty nice, strong resistance in play. So what continued from there? Well, we lost this key support trend line here. I don't want to get too taken back by talking about this just yet whilst the data is about to drop. But it does get a bit crowded if 1 minute 36. So let's get onto our lower time frame chart. So yeah, what's your predictions? If anyone's watching live or near the comments, then please put your predictions, whether it's going to be good or bad for crypto. My bet is it's actually going to be a bit good for crypto based on the CPI data from yesterday. Not crazy good. I'm talking like You know, if we look here, the core PPI is 0.2%. I predict it's going to be about 0.1%. And PPI month on month might be the same, if not 0.2%. And I do actually think the unemployment claims are going to increase. I've got a bit of a conspiracy theory about AI and ChatGPT starting to cause a few ripples in the old employment market, because it is very strong. And it does, like, whilst we can argue, yeah, sure, like Google's on top of it all, it's going to stop you from doing that. It's like, yeah, but it is kind of good at what it does. I think don't kind of like cripple it straight away. Seems like a bit of a, oh, we're starting to see some movement. But which way are you going to go? We've got this resistance. Is it going to hold? If we break this resistance, I'm pretty confident we're going to go up to take profit. But again, we've got 11 seconds to go. Obviously, we're going to be a little bit delayed because we are the very lowly retail sector. Right, here we go. There we go. Take profit. Done. That's easy enough. So what do we got? We got 26,000. What? I was wrong on the unemployment claims. Oh no, I was right on the unemployment claims. Bang on. Sorry. I see green, and that is good. So there you go. Christians, don't want any more tips for today, thank you. Yeah, here's one tip for today that I want. Stop touching stop losses. Let them play to target. So yeah, so we're about 11% up on the day. We'll see what comes out. I don't think there's going to be another signal. If we were to put on high frequency, there probably would be. There we go, 0.2%. Oh, I was so close, so close. We came 0.2% on the core PPI month on month, and 0.2% below on the US PPI. So both of these are technically bullish, despite what Bitcoin's doing right now, are technically bullish for crypto. We might soon see, no, we won't see a bearish signal just yet. But we could, no, we won't see any signals. So yeah, so where does this leave us? Okay, I'm sure we've all had our fill of PPI and don't need to worry about that for another month. It's not quite as convincing as the CPI was it? You know, like at this point, the CPI was already well on its way pumping up. But this one, we just barely kind of made a dent. Which I'm not too fussed about. Considering, like, you know, where we're at the moment, that was bullish unemployment data, that was bullish on the whole, bullish PPI data. But, you know, we haven't quite seen the reaction, I think. Of course, we are literally 3 minutes into it. So we haven't quite seen the reaction that we immediately hoped for. What say? I think stick to your longer term analysis right now if I was you, which coincidentally is what we're going to look at. So yeah, like I said, I haven't honestly, I didn't kind of get caught up in the fray of the bullish CPI data, just because, you know, you do a lot of this longer format analysis and stuff like that, and you kind of, it's a bit cluttered, but such is life. Yeah, you do a lot of this longer format analysis, and then you forget sometimes that you see this data drop and you're just like, oh my God, that's kind of going to completely change everything. Whereas you've got to remember that, like, a lot of the data that is included in this longer format analysis that has led you to this stage. So it kind of gets absorbed within there. And what I generally find with a lot of these Fed announcements is, outside of real significant ones, real kind of game changers, which happen a couple of times a year, they don't necessarily change the direction of the markets, but they do cause a lot of disruption and volatility in quite a short-term period. But it does rewrite itself quite quickly. And like I said, relatively bearish on BTC, and we'll have a look why. Like I said, we've got this ascending triangle pattern just here, which has had 3 kind of clean taps coming into it. We've broken down, we've broken through the 20 daily exponential moving average. We've now broken below the 50 daily exponential moving average in just here, and we've tested it and got a pretty hard rejection. But we do sit on this kind of band of pretty good support, I'm not going to lie, at about 27k. And should we let's see what the actual take on that was. Yeah, should we break that, then, you know, I say not all bets are off, but I certainly think 25k is well on the path. What? Only $6? $7? That doesn't make sense. What are you playing with me for, MEXC? I mean, I'm not going to complain. Like, we're up... what are we up? Do the old maths to not... Yeah, not going to complain too hard. We're doing all right. If I can get my calculator to work, 6.94 plus. We're up 5.6% on the day with the PPI data coming in. So let's have a look. This should be 0 fees. Yep, funding fees, trading fees. What is going on there? Why have I been charged a fee on that one when it was both limit in and limit out? Then this will be definite fees and definite fees on this one. Yeah, I'm not going to start harking on too much about. Okay. Yeah, I'm not going to start harking on too much about the fees were big on that one. It was almost $1. Yeah, we are working off the basis of a $100 account, so 5.6% up on that. It's pretty good for the day. It could have been so much higher if I'd have just left that trade to go to take profit. Been a bit sharper on that short, but I couldn't really have done much better on that most recent long. That was fine. Apart from maybe getting my allocation right. It looks like my allocation was a bit off on that one. But it is what it is. So yeah, so 6% up on the day so far for the live trading. We will take a quick look at the BAL trade that we put out earlier on. We'll have a look to see if there's another opportunity. We can actually get rid of this lower screen now because we're not doing any live trading until... Where are you? Be gone, foul creature. There we go. It sounds like someone's having a party outside with some scaffolding poles. So yeah, so long way around answering your question. Are we going to see 26,000 before 31,000? I'm pretty confident. Pretty confident we will. Like I said, we're just hanging around this 27k support. Testing it quite a lot. Somewhat bullish PPI data that's had little to no impact. Even the CPI data has been, all the steam was taken out of that one. We're trading on the wrong side of the 50 and the 20, on the wrong side of this trend line. And like I said, we realistically only have this one support. And then a couple of things to be conscious of as well. We've got this untested weekly pivot right here, which is, you know, the start point of that one is at 26,300. Really high chance that we'll wick that. Very, very high chance that we'll just wick that. And a pretty high chance that we'll kind of fill a good part of it. Like I said, my realistic thoughts are around about 25k. I do feel like it's going to be a pretty sharp and ugly dump as well. Not to sound crude, but yeah, that's where we're at. So PPI data is in. We had a successful winning day trading, 6%. Rounding it up. I know it's 5.6, but we'll round it up to 6%. Trading, so happy with that. We got out of the PPI volatility, pretty unscathed. Big win. So let's have a little look at some trades. The signals that we've got through today at 5 a.m., we didn't get any 11 a.m. signals, which doesn't surprise me at all because the market was flat AF. And the way my signals work are 5 a.m., 11 a.m., 5 p.m. So, you know, we'll always have signals during the live streams, which is cool. But not all, you know, I do like to add a element of trading analysis, technical analysis even, to these. And say this is a good example, what has really turned me off entering it, which I'm kind of regretting now. But right on here, so as we can see, I mean, check this out, right? So swing low, higher low, lower low. I mean, that's pretty bullish, in my opinion. You know, we've not broken this. We've just come down to the 20 daily exponential moving average. Got a real nice support here. I know it's telling us to go short. It did bounce up, and the thing that I almost did take this trade on was the fact that we'd retraced so much to around about almost 10% that I was kind of tempted just to pop this trade on. And the reason being is because we had these 3 significant rejections right here, which really does tell me there's a lot of selling pressure around that area. The thing that is, like I said, not filling me with a huge amount of confidence, yeah, Bitcoin's stacking it now, not filling me with a huge amount of confidence was this big old bullish divergence. So where I kind of was at this period, I mean, arguably we could say, oh, we should be abiding by this trend line, which is fine, but you know, there were just better opportunities out there, to be honest. So yeah, so when you see, I mean, like if we take a look at that kind of price movement, it is a regular price movement in the first place. We've gone 62%. So when things like this happen, there's irregularities in the movement. So trading analysis can somewhat go out the window. So whilst this may be quite a legit short trade, I'm getting this big old divergence here, which is saying maybe just be a bit careful there. And equally on this one, so kind of pretty much the exact inverse that happened on this trade. Yeah, so the exact opposite that happened on this trade in that we had a massive move up. Look at that. I mean, 25% move up in, well, if we want to be more accurate, in 12 hours, we had a huge 22% move up. We did, obviously, we kind of will break a lot of bullish boundaries there with a move like that in this untested weekly pivot and this untested weekly pivot and breaking the 50 and 20 daily exponential moving average. I mean, it's quite often that if you do a 20% move, you'll break a 20 daily exponential moving average. Quite common. I mean, you know, not maybe towards the end of horrible bearish seasons or the thick of horrible bearish seasons. But again, you know, this one wasn't, whilst my kind of general thesis on Bitcoin is bearish right now, I'm not super inclined to be looking at longs. And yeah, so that was that reason. I mean, here's a great example as to why, you know, this is kind of not a million miles away from this ant trade. If you see here, obviously we pushed up really nicely. And then very, very similar, you know, almost identical in that kind of real sharp move up. So I don't know if it's going to be 25%, but it's still a very, whoa, actually it goes up. Yeah, so not far off, like 23% move up, and then a solid 16%, 17% rejection straight down. So it left me with the last one, which was BAL, and yeah, quite like the look of it, to be honest. So this is the trade that we've gone in for today, and it looked good to me, and it's doing pretty well so far. Bitcoin is going crazy volatile right now. It's just dumped from its high where we closed our trade. It just dumped about 1.2%, which, yeah, horrible trading conditions, to be honest. I actually imagine we'll probably be seeing a short signal come up for it pretty soon. Yeah, very soon. We're almost going to break this support. We're kind of breaking this trend line right here. As you remember, we literally drew this trend line on earlier on. So there could be a short opportunity for Bitcoin coming up. I know it seems like no-brainer, but we'll see what happens here. We are coming into a nice bit of price support, and you know, if we slam through that, then it's game on for sure. We could continue to go further and further down. We'll quickly jump back onto the 6-hour chart after having a look at BAL. Don't have any other trading opportunities right now that I want to dive into. May kind of have a little look at some of these ones that triggered at 11. But yeah, I mean, Bitcoin is kind of king at the moment, and it's dumping pretty hard. So why did I take BAL? Well, big reasons are, you know, we broke through these. I don't really abide by these. I don't follow them. But when you see crosses in the 20 and the 50 on the daily, they can be pretty strong, you know. Like, so here's a cross just here. And this is kind of like basic 101 trading. But there's nothing wrong with it. Like I said, the problem is it can be pretty laggy. So for instance, if you were to take this trade here, that's right at the bottom of the move. But if you were to take this trade here, you know, you get a good push up of like 12%. And equally, if you took this trade here, it does go down a further like 12%. So ultimately, not the worst by any means. And this would have been a winner. That would have been a small winner. That would have been a loss. And then this would have been a loss. Then this probably wouldn't have yielded a great amount. You have to be a bit sharp on that. And then you would have got a bit of a win there. So it does kind of sit around about the 50% return. However, you know, it's a very undefined risk-reward strategy. So you have to be quite agile with how you get out of those trades. Like, you got to know when the market's turning. Divergences will for sure be your best friend on them. But yeah, like I said, don't necessarily live by them, but don't ignore them so much, because they are quintessentially showing you a change in the trend direction, literally because it's the moving averages. But anyway, that's there. It's not what we're founding a lot of it on. What we are founding it on is this rejection just here, this wick, which went up to 20, got rejected, went up to 20 again, got rejected hard, and also this very significant hidden bearish divergence, which is pummeling it down. We lost local support, went back up, retested, lost it again. So for me, that was a bit of a no-brainer trade. And what I did like about it, you know, we're testing this last resistance. And yeah, you know, I think we're going to head on down. We'll be a little bit kind of conscious when we come down to about this point here. And we, you know, we'll see where the general state of the market is at that point. If Bitcoin's starting to show some strength, then we could look at kind of bailing on it a little bit early. One thing to be a little bit conscious of is, you know, price is moving down, but we're not. Up until quite recently, we weren't. Oopsie daisy. This is the trend line I want. These are the droids. Yeah, so we're kind of getting to this point of inertia where it's like, if we do bounce here at this section, or this kind of support quite significantly, then that is looking a little bit like a bullish divergence, which we don't want to see. However, if this drops down further, then it basically gets back to format of going in pretty much the direction that we're expecting it to go in, which is down. Bitcoin's looking pretty shaky, so we'll just jump back to that chart. As you can see, it's dumped quite a lot. USDT. Let's have a look at the longer format one. So yeah, we're getting to, you know, the interesting zone. Once we start to break into here, then full attention to Bitcoin, because we start to get into a point of well, potential drop really. And like I said, I do feel like it's not going to be a slow descent. I think losing pretty much 27k this time round will be really quite painful. Very sharp drop, so just watch out. I could be wrong. But I'm just following technical analysis here. And you know what, one thing we can actually take a look at, which gets a little bit complicated at times, but is quite straightforward when you understand the kind of the bare bones of it all. We've got this great kind of setup, which is crypto sentiment. I guess you could look at it like money flow as well, because that's what it is really. You know, one of the things outside of technical analysis is really great to look at is trying essentially to predict where the money's going, and there's not a huge amount of places I guess it can go when you're looking at these charts and stuff like that. That's lies, it can go many places. But yeah, it kind of, hopefully it gives us a bit of a bearing on what's going on in the grand scheme of things. If it fancies loading today. Actually don't need this up, so we can get rid of that. We are getting there. Wow, I need to get some better internet. It's all going fine until I start live streaming. There we go. And it has nothing to do with my complicated indicators, so you can screw off. Yeah, so a lot of stuff going on. I can see why trading viewers having a bit of a shit fit trying to load up there. That's understandable. So yeah, so you're pretty much familiar with a lot of this analysis that we've just kind of run through. There is a kind of small divergence, which is to be conscious of, but that's only due to this CPI wick, so I'm not really paying too much attention to that. We've got the crypto total market cap, excluding BTC and Ethereum. We've got the BTC dominance down here, the USDT dominance, and the dollar. Dollar price is super important, really. I've spoken about it before. Oh, that's interesting right here. We'll take that's a no-brainer. I mean, it was going to be bad for the dollar anyway. But we have, this is my favorite one actually of the 5. The alt market cap price, check this bad boy out. So we are in a very distinct descending wedge right now. Not to say that we're not going to go down further, but this really reminds me a lot of coming to the end of the really nasty bearish period on the daily for Bitcoin towards the end of 2022. This is pretty much almost the identical pattern that we'll come into. And then we just plateaued a little bit, and then we pumped like 80% for the most of 2023, which is nice. And with showing something pretty similar. We just filled this weekly pivot down here. We are holding. We've got a little double bottom. More significantly as well, we've actually got a pretty bullish divergence. But you know, Bitcoin is king, and we can't forget that. So if Bitcoin's going to dump down, it will take the alt market caps down with it. I don't know if we'll head down as far as this. I'll put it all the way down to this point here, because this is where our next kind of like, realistically, our next kind of key support is. We have come across some historical support here, which we've quite clearly held. I don't know for how long, but what is looking good here is, like I said, these patterns are pretty great. You know, they're pretty strong. And it's not over a real short period of time either. You know, this is so far almost a month. So we'll see what transpires here. But I do think, like I said, we're going to go down a bit further. Once we break out, this will be our definite target region, around about 367 billion. Maybe start off at around 365 billion. But if we do lose this kind of quite mild support, I'd say, and also this kind of full-filled weekly pivot at around about 350 billion, maybe a bit lower, 346. Then I do feel we could potentially see as far down as 331. And what does this mean? Well, this doesn't necessarily translate perfectly to like low caps and mid caps, but it does translate very well to mid and high caps. So use this as a bit of a blanket resource for a general price indicator for a lot of those mid to high cap altcoins. It's good, you know, like I said, a lot of the time you'll see it following the Bitcoin price, certainly the Bitcoin and Ethereum market cap. We don't include those because they equate to, I'm not sure what it is, like 60%, I think, them combined market cap. Well, we can see the BTC dominance right here is at 50%. So I think, yeah, I think potentially around about 60%-ish. But again, please don't quote me on that. Check the Ethereum dominance and add it together. I don't track the Ethereum dominance because it's a bit pointless. I mean, I was considering putting BTC and Ethereum dominance together. I think that'd be quite accurate, but I think also a little bit unnecessary. This is one that fills me with a little bit of hope, actually, in regards to the longer-term bullish sentiment, because we've got finally, it's been on quite a big move up. When we look at, well, pretty much non-stop up. So when Bitcoin dominance goes up, then the alts do suffer because people kind of forget about them, or at least that's what it's telling us anyway. So it's had a 20% move up in dominance, which is bloody huge. But the other side of it as well is, as dominance is going up, it actually means that, okay, so are you more likely to hold, let's say, UMA or Bitcoin? Which one would you be more likely to sell, kind of thing? People would be more likely to sell UMA because Bitcoin has an obvious stronger confidence as a store of value. So what that basically means is it doesn't necessarily mean that Bitcoin is getting stronger and there's more money coming to the market. It just means that altcoins are getting weaker. And Bitcoin's kind of thriving, the hodlers are remaining. So it usually is quite bearish for the market when the dominance is increasing. Not definitively, but usually. The perfect scenario that we want to see is Bitcoin price going up, altcoin market going up, Bitcoin dominance going down, and the Dixie going down, actually. And so what we're starting to see now is we can see that the alt market is lining up for a breakout. We can see that the dominance is kind of starting to show a good bit of weakness. I wouldn't say a distinct bearish divergence, but given the aggression, like how aggressive this trend line down is here, and that is plateauing, I would say that could be deemed a bearish divergence. We do have actually two untested weekly pivots below, so it's kind of going to show that the price is a little bit overstretched, overextended, price but dominance amount. So yeah, so keep an eye on it. Like once we start to see dominance drop a little bit, we'll see a lot more fun and activity coming into alts again. As I said on the last live stream, I start to get a bit nervous when we see like a 1% move in Bitcoin and a 5% move in everything else, because it's just, yeah, it shows a lot of uncertainty in the market, which is not great for stop losses. That's when you get wick hunting. That's when it's really, really quite soul destroying, to be honest, trading in it. Not going to cover USDT dominance too much. In a nutshell, when that's going up, lots of USDT is generally coming onto the market. Like it can be coming as fresh USDT into the market for people to buy the dip, or it could just be when there's a lot of FUD and stuff like that, it will spike because people are obviously selling Bitcoin and altcoins, and wanting to have a stable asset. USDT because it's the biggest stablecoin asset. I'm not sure if there is a chart for all of them together, but it'll usually be quite low, you know. People generally won't hold a huge amount of USDT on exchanges and stuff. So yeah, I guess that's not just on exchanges, is it? But a lot of people probably would just convert it back to fiat if they're not going to be hodling USDT, are they? It's going to be kind of a relatively transitional phase, whichever way it's going. So yeah, when it spikes up, you know, activity is happening, going to happen anyway. And then last but not least, obviously the dollar. We always want this to be going down, because when it's going down, it means that money is going into other things like gold and Bitcoin. So we want the dollar to be going down. Doesn't always happen, but a lot of the time When the dollar's decreasing, Bitcoin is increasing. So we did some analysis on TradingView for this earlier on. We saw a significant breakout for the not first time, but we've seen a lot of rejections from the 20 daily exponential moving average. So I would condone that as being relatively important, but make it a little bit bigger so you can see it. But as you can see, we have hit this trend line, which we drew on ages ago. We didn't know about this candle when we drew this on, but it kind of hit it, got rejected, and is slamming back down. We found support in the 20D EMA, so we don't know, is that going to act as support? What's going to happen here? So we do have quite a critical point of, if we break out of 101.961, that's significant. If we break back below 101.652, that's significant, because I feel we'll head on back down and test here. If that happens, then I think Bitcoin will pump. If we break out here, which is probably the more likely option, then we're going to see Bitcoin dump. So, as I said earlier on, it can be a little bit complicated in trying to navigate all these, but things to remember in basic terms. If USDT dominance is increasing, just be on guard. Doesn't necessarily mean bullish or bearish. It likely means that people are getting ready to buy the dip or selling their altcoins. So it can mean two things, but it does mean activity's happening. Dominance, if that's rising, usually that's not a good thing for Bitcoin, or altcoins, definitely not. Crypto market cap, when that's rising, that's great, but usually Bitcoin will be rising as well alongside that. Then, of course, Bitcoin price, when that pumps, then generally everything pumps. But yeah, so nutshell, Bitcoin price pump, alt market price pump, Bitcoin dominance down, US dollar down. That's bullish. That's pretty much bull season, to be quite honest. Because when you have the Bitcoin price rising and the dominance dropping, then that means that altcoins are racing up. They're increasing their market share more than Bitcoin is. So that means that loads of money is piling into the market, which is great news. And you'll rarely see an occasion where people are selling all of their Bitcoin for alts. It just doesn't really happen. But yeah, make sure that you have, I'm not saying exactly like this, but make sure you have a keen eye on at least the dollar and what that's doing, Bitcoin dominance and what that's doing. The alt market cap is a little bit important, but dominance, dollar, and Bitcoin price are always things to be mindful of when trading. And on that note, we'll take a look at where we're at. Awesome. So we are coming to the end of our live stream at a bit of a longer one today, as I managed to have about half an hour off yesterday. But there was a lot to talk about. You know, we want to talk about where do we think the Bitcoin price is going? Down is what I think. So we'll see how it goes. We might see a little pump, but it's kind of me just basically covering bases there. But like I said, my general conviction is down. Alrighty, guys. Well, thank you very much for watching. Good old another positive day on the scalps. If you do like this content, then please like and subscribe. If you really like it, then follow us so you get alerted of all of the new videos that come out. We're doing a whole ton of analysis videos every day. So yeah, like don't miss those. That they're released as we do the analysis, so they're as close to the actual time of impact as possible. Of course, there is a bit of a delay, but we don't do it on like the 1 minute time frames. We generally do it on 6 hour, so you can trade along. And if you really, really, really like this content, then join our premium channels, and you can find out all the information there, literally at the top of the screen, and the big banner that says Join Block Party Trading Premium and Indicators. There is a 7-day free trial, so you can try it all risk-free, including this wonderful indicator that you can see behind us that just netted me 6% for the day, and I traded terribly. So it should have been 27%, but such is life. Anyway, guys, thank you very much for watching, and we'll catch you... Oh, short signal. Catch you on the flip side.